Welcome to your Mortgage Insider Update. Today is April the 21st. Uncertainty, that's what lies ahead. We've seen that in the markets the last few weeks. This going forward is going to continue uncertainty. So that is not a good sign for our economy. Long term, it could be better for interest rates, but in the short term, definitely more pain than gain. We'll take a look at the charts here in a minute, but tariffs are continuing to put a cloud over the economy. We are starting to see a lot of the S&P 500 companies will come out with their earnings for the last quarter, but that's when they usually give their projections, what they expect to see in the future. So a lot of them might be cutting back on orders. We're seeing Boeing planes are not being delivered. Chinese airline companies are refusing to take these airplanes that they purchased months, if not years ago. But right in the forefront of this, we are going to see what's likely to be a slowdown and potentially a recession that will start to come up again more and more. As you see in the news, the Atlanta Fed just this week has projected that the first quarter GDP was negative, and that one quarter does not make a recession, but that means that the next quarter, the next 90 days, are very critical. So let's take a look at the charts. We start this week off slightly up on the 10-year Treasury notes at 4.35%. That is up from the end of last week, but finding some support, finding hopefully a place to lay low and take a little bit less volatility would be a really helpful thing. So we'll take a look at what the last few weeks have done, but we can see that last week we dipped back down to the 25-day average, sitting just above the 50-day average right now, finding support, kind of a cap here at the 100-day average. So if we can just maybe find a series of time where the rates come down, rates come up a little bit, and not such a huge move, then a lot of that uncertainty that people are feeling could come and level out. On the mortgage-backed securities, the price of the mortgage-backed security will drop as investors are pulling back or not purchasing, and that's going to raise rates to the consumer. That's why we see the opposite effect here on the 30-year 6% mortgage-backed security coupon. And very similar to what we saw in the 10-year, only in reverse. The price actually today fell pretty substantially and then has found a bid and is settling right here at the 100-day average for the mortgage-backed security prices. We saw that top, that improvement in interest rates at the end of last week. Trying to find some ground as we get into the last half of April here. Post-Easter, we've got PCE coming up in the next week. We've got the Fed meeting coming up in early May. So, if we can just hold tight here and try to find some direction, there is talk that the Federal Reserve could be open to a cut in their short-term interest rate. The ECB, the European Central Bank, just did that this last week with a 0.25% cut. Puts a little bit of pressure on the Fed, but they have often been known to do the opposite of what everybody else does. It could be unlikely to see any rate hikes, but at least just staying steady will continue to hopefully pressure inflation down, but it'll also be coming at a time where inflation might be rearing up with the cost of tariffs, bringing things into more expensive imports. So we'll hold tight for another week of hopefully steady market action. Sure, there'll be some ups and downs as, like I said, the S&P 500 companies, about 25% of the S&P 500 will post their earnings for the last quarter and oftentimes give guidance and what they see going forward, so that the companies are the ones making a lot of the big purchases and big decisions. So that could drive, see what our economy does here over the next 90 days as we get those projections. Have a great week.